Listen to me. If you are approaching age 73, or if you are already there, I need you to stand up, walk over to your desk, grab a pen, and pay very close attention to what I am about to tell you. Because right now, there is a ticking financial time bomb sitting inside your traditional IRA. And if you do not handle it correctly, the federal government is going to step in and take a massive bite out of your hard-earned retirement savings. I am talking about required minimum distributions. RMDs. You see, for decades, you did exactly what you were supposed to do. You were a great saver. You put your money into a traditional IRA, you let it grow tax-deferred, and you felt safe. But here is the problem. The IRS did not let you defer those taxes forever out of the goodness of their hearts. Oh, no. They were playing the long game. And once you hit age 73, or age 75 if you were born in 1960 or later, the government says, game over. This is the big fear that keeps so many retirees up at night, and it should. Because this forced income does not just increase your tax bill. It creates a devastating domino effect on your entire financial life. When your RMD pushes your adjusted gross income up, it can trigger higher taxes on your Social Security benefits. It can push you into a completely different, higher tax bracket. And worst of all, it can trigger the dreaded Medicare IRMAA surcharges. So the question you must ask yourself right now is this: how do I satisfy the law, get the IRS off my back, keep my income down, and stop throwing my money away on unnecessary taxes? The answer is a beautiful, underutilized tax strategy called a Qualified Charitable Distribution. A QCD. I want you to think about how you normally give to charity. If you are like most people, you take your RMD, it lands in your checking account, you pay taxes on it, and then you write a check to your church, your synagogue, or your favorite nonprofit. Then you think, well, I'll just deduct it on my tax return. No. Stop doing that right now. That is a massive mistake. First of all, because of the standard deduction limits, most retirees don't even itemize anymore, meaning you get absolutely zero tax benefit for that donation. Second, under the tax laws, itemized charitable deductions face strict adjusted gross income floors and caps. You are fighting an uphill battle. A QCD bypasses that entire messy system. A qualified charitable distribution allows you to instruct your IRA custodian to send money directly from your traditional IRA to a qualified 501(c)(3) charity. The money never touches your hands. It goes straight from the account to the organization. And here is why this is pure magic for your retirement: because the money goes directly to the charity, it never counts as taxable income to you. It is completely excluded from your adjusted gross income. But, and this is the absolute best part, the IRS allows the direct transfer to count toward your required minimum distribution for the year. Think about what that means. If your RMD for the year is $20,000, and you don't need that money to live on, you can do a $20,000 QCD. Your charity gets the full $20,000, your RMD obligation for the year drops to zero, and your taxable income for the year increases by exactly $0. You have completely neutralized the RMD tax trap. You didn't just take a deduction, you prevented the income from ever existing on your tax return in the first place. You protected your Social Security from being heavily taxed, and you kept your Medicare premiums right where they belong. But you have to do this right. The IRS has very strict rules, and if you mess up the execution, the whole strategy falls apart. Rule number 1, look at your age. You can actually start making QCDs at age 70 and a half. That is a very important distinction. Even though your mandatory RMDs don't start until age 73, you can start using QCDs at 70 and a half to systematically lower the total balance of your traditional IRA before the government ever forces your hand. A smaller IRA balance at age 73 means smaller mandatory RMDs later. You are playing defense early. Rule number 2, look at the limits. For this year, an individual can donate up to $111,000 per year through a QCD. If you are married, you and your spouse can each do up to $111,000 from your respective IRAs, for a total of $222,000. It doesn't matter if you take the standard deduction or if you itemize, this is an above-the-line exclusion available to everyone who qualifies. Rule number 3, look at the account type. This strategy only works with traditional IRAs, inherited IRAs, or inactive SEP and simple IRAs. You cannot do a QCD directly from an active employer 401k or 403b. If your money is still locked up in an old 401k, you must first execute a direct rollover into a traditional IRA before you can utilize this strategy. Here is your exact, actionable takeaway to get this done. Do not wait until December to think about this. If you want to use a QCD to satisfy your RMD, you need to call your IRA custodian, whether that is Fidelity, Schwab, Vanguard, or wherever your money is kept, and you tell them, I want to make a qualified charitable distribution. They will provide you with the specific forms, or they will issue a check from your IRA made payable directly to the charity. Some custodians will even give you a checkbook attached to your IRA specifically for QCDs, where you can write the check directly to the charity yourself. Just remember, the check must be made out to the organization, never to you. Once that transfer is complete, keep every single receipt and acknowledgement letter from that charity. When tax season rolls around, you must ensure your CPA or tax preparer knows that this distribution was a QCD. Your custodian will issue a 1099 or showing a distribution, but it is up to you and your tax preparer to report it correctly on your Form 1040 so the IRS knows it is non-taxable. Do not let the government dictate how your hard-earned savings are spent. If you do not need your RMD to cover your daily grocery bills, your utilities, or your housing, and you already have a heart for giving, use the Qualified Charitable Distribution. It allows you to support the causes you care about most, while keeping your income low, your taxes down, and your financial freedom completely intact. You worked too hard for this money to just give it away to the IRS because you didn't know the rules. Take control of your retirement accounts today.